Everything in this video is not intended as financial or investment advice and is for educational purposes only. I'm Josh Olswich, the head of research at Valkyrie. Let's take a look at the midweek market update. There's sort of been three things brewing really over the past 2 to 3 weeks. The first being the correlations to legacy markets, meaning S&P, NASDAQ, tech stocks, that sort of thing. Second thing being historically low volatility for BTC, implied volatility as well plummeting. And the third being talks of dormancy flows or on-chain metrics that may or may not be pointing to historic periods in comparison where things have bottomed in price. I don't think that's going to save you. I'm going to talk about all those things collectively, but the focus is going to be on BTC and ETH here, on technicals as well as some on-chain stuff. But first, we'll hit on the legacy correlation point. I mean, it hasn't really looked like crypto since January, since the Fed came out and started talking about rates, tapering, fears, maybe the market's pricing this in. Maybe everyone who was risk on is starting to get risk off. Maybe the same people that bid up crypto are starting to pump the brakes a little bit. For whatever reason, correlations seemingly quite high between Bitcoin, ETH, and the S&P. In general, in crypto land, we don't see periods of high correlation in bull markets. Bull markets are typically where you see massive outperformers at any given time, not everything correlating collectively. Even now, in a seemingly bearish period since the beginning of the year for a lot of large cap coins, there are certain coins that are reaching escape velocity in different ways. Curve, Matic, other layer 2 options. It doesn't matter what it is, but they are having their own little bullish moments right now. But the big guys, the large caps, are largely being held to this SPX correlation. Maybe we're decoupling a little bit here at the time of this video conveniently. Depending on how you want to manipulate this, obviously this can look better or worse, but ultimately when you measure the correlations with math and statistics, they are quite high and have been quite high really since March 2020, post COVID candle for crypto. I like to zoom way out first and then sort of zoom in, look at the entire petri dish. Then we'll see individual cells here. We'll look at the cell wall. We'll go deeper, whip out the electron microscope, go a little deeper. So if we're looking at Bitcoin since 2013, this is the Bitcoin index that TradingView puts out, and you try to find indicators that potentially tell you where was the top, where was the bottom. Can we do backtesting on this, which is basically what you're seeing here. This is one of the indicators for me that sticks out a lot as something that's highly valuable and potentially yielding where bottom activity might be. So historically, if we look at where the highs have been, where the lows have been, this is the 2-year MA. This is the 730 MA. This red line is 5 times that, the white line being the middle of the two, the average of the two. So this is log scale, by the way. All these charts are log scale. In case you've never seen any of my content before, all the charts forever and always will be on log scale, just my own preference. But when we're looking for levels to watch based on extremely high time frame moving averages, right now 30K or lower is one such place where, yeah, we'll be in the depths of a bear market, most likely. But at the same time, should we turn the ship around, that does usually tend to be a bottomy period. This doesn't give you the exact bottom. You can look at the 200-week moving average for that. This gives you a good zone, a good idea of where things are extremely overbought and where things are extremely oversold historically on backtesting. And the top end of this is at 152. I think no matter how we slice this, as I look through all of these various indicators, I can't find a single one that's telling me, yes, we're bullish right now, right? We're either bullish, neutral, or bearish on any given time. Bullish indicates the likelihood of upward continuation. Bearish indicates the likelihood of downward continuation. Being neutral just means going sideways in price, doing nothing in price. And on aggregate, really since 2021, we've been essentially neutral. This is a massive wide range, 30K to 60K. But ultimately, we haven't done much of anything. Here's the pitchfork, just another indicator we can use, sort of giving us time and direction, trend strength, rate of change, that sort of thing. And in general, we want to stay in a bullish pitchfork, which is what this is. We want to stay in the middle or close to the middle. As we get away from the middle, we're overbought. As we get below, we're oversold. But again, this will give you levels both on the way up, on the way down, to watch for How does price react? Does price find support? Does price find resistance? Is this believable based on the previous rate of change, right? Backtesting sort of built into this. If this didn't look good, I wouldn't be showing it, but it looks good. So the next levels down here on the pitchfork are what I'd be watching. Should we keep crumbling lower and lower and lower? And ultimately, we don't start to flip bullish on this until we're above 61, which is hyper conservative. But in order to maintain this rate of change since 2019, that's where we need to get back up into that zone. This is kind of reminiscent of S2F, stock to flow. It kind of fits that stuff a little bit. I'm not a big fan of stock to flow personally, but you can see how this will deviate from the mean over time. Here's a busy chart that I've basically been following since mid-2021, and it hasn't really changed much. The horizontal rectangles illustrate areas of sensitivity, support, and resistance. Again, you can see this range from 30 to 60. You can see how we've reacted around these price levels. Volume per day since 2021 has continued to drop off to nothing. This is Bitstamp specifically, so not a great measure of activity in general, but a microcosm, if you will, of volume throughout 2021. Volume hasn't picked back up yet. We're starting to creep into the lower quartile in the 30 to 40 range of the previous year's 30 to 60 range. We're starting to eat into this volume zone from 32 to 39. This is volume at price instead of per day, known as VPVR, volume profile of the visible range. But typically you can also use this as areas of support and resistance. So how you'd read this is there's a decent amount of support from 36 to 38, but in the entire year's range on Bitstamp, most of the volume was at 34. This is going to change slightly from exchange to exchange, but depending on where you trade, definitely something you want to be paying attention to. On the upside, it's also telling you 47, big area of resistance, past that 56, 57. So yes, we're in a range. Yes, we're potentially about to break down into a pretty decent area of support. And we've also got this 5200 cross in the background here to contend with, which is also bearish. I use EMAs over MAs. A lot of the headlines you'll see about death crosses are specifically relating to MAs. EMAs value near-term price data more than the entirety of the price data. MAs are just an average in general, but you can see we crossed here. This is known as a death cross, indicates bearish trajectory. So we're currently crossed bearish. We're currently below the 200-day moving average. Those are two great litmus tests for, are we going up or down? What does it look like? And the trend right now, as the read, would be bearish. This doesn't necessarily mean we will see significant bearish continuation, but it does indicate and give you a pretty good idea of what's going on sentiment-wise. We were bearish here. We crossed bearish here. We crossed below. We didn't end up with a strong bearish continuation below 30K, but that's the current area that I'd be watching for on the downside here. One other thing this chart is showing you is yearly pivots, which are based on the previous year's highs and lows, mathematical calculation. That's also giving you support at 26, giving you resistance at 48, and then resistance at 70. These are big, big levels to watch as well, but also there in the background. We do typically see market reactions off of all that. Additionally, to add on to the bear evidence, we have the high likelihood of a chart pattern formation known as a head and shoulders. It's exactly how it sounds. You have a high and then two lower highs that are typically equal, with the support being the neckline here, the green line. And this could be considered a fractal chart pattern. Like I said, chart patterns carry a bias. They carry directionality. The bias here is definitely bearish, if this is believable, right? It's not textbook, certainly, but I like to say it's not a head and shoulders, right? It's convincing enough that it's there for me. And if I'm looking at the chart, I can't unsee this. So just as these carry bias, directionality, and targets, they also carry invalidation criteria. And we need to look no further than the first half of 2021, where we had this exact same setup, arguably. And we saw invalidation of this right shoulder with a breach above the right shoulder. So currently, that right shoulder is somewhere around 51, 52, 53, depending on the exchange. And another sensitive area that you'd watch for, a bullish price reaction, a rejection of this possibility. If you're bullish, you don't want to see us breaking lows. That's pretty much a given, not exactly rocket science. So any lower lows here, we start to get into major trouble. Now we could chop around from 42 to 50, sure, but lower lows almost assuredly below the current low. It would be a multi-month low. and we'd be revisiting levels in July. Certainly not bullish. The target for this is actually, I left it on this chart, but it's actually the 1618 fib, which is at 25K. So ultimate bear in the near term for me is between 25 and 26. It would require significant momentum to get through this volume support, to get through the 2021 support area around 32, 33, somewhere in there. So like it could happen, you know, if this then that. It's a decision tree. That's definitely what I'm watching here on BTC. And as far as another metric is concerned, this is called the Ichimoku cloud. And I'm just going through the list, right? Is this bullish? No. Is this bullish? No. Is this bullish? No. Is the cloud bullish? No. So the cloud is also showing you, much like the 50 and 200 cross, if we're above, we're bullish. If we're below, we are bearish. If we're inside, we're neutral. And we can look to these specific cloud crosses to sort of give us directionality, much like the 50-200 crosses. So currently we're below with a bearish cloud. It's really cut and dry. That is a bearish situation. Now, does this mean we're going to be bearish forever? No, but it does give you criteria where to expect some sort of reaction in a bullish fashion, in this case, 54K. Again, relatively conservative based on where we're sitting here at 42, right? We can see a lot of action between 42 and 51, but ultimately on the cloud, we are not bullish until we're above 54. And this is dynamic, so this will adjust based on prices of the previous periods selected. 2061, 2030 is what I'm using. But the ultimate point is here also not bullish on that. And something else about these cloud crosses, we typically don't see more than one a quarter. So when they do happen, they're definitely worth paying attention to. And you can see between May and May, really, how we remained bullish on the cloud that entire time. So this is another way of saying it's not going to move without you. There's going to be plenty of opportunity and you're going to see this coming. Right now, again, for me, this is just strictly bearish. Let's go to another low time frame MA indicator. This is the alligator fractal. Blue, red, green cross is bearish. And again, there's no contest here. There's no wishy-washy about it. This is bearish. Trend metrics here, definitely bearish. And the fractals help you with stop losses in the active trade or in the active trend. So in this case, if the active trend is short or bearish, a fractal stop loss would be around 44. So this would be a much more aggressive, let's say, entry on a trade. But not only do you want to see a break above 44, but you also want to see these MAs recrossing bullish like they did in July, like they did in October, to sort of signify, yeah, it's go time. This is for real. And again, you can look at this on backtesting. You can adjust these settings depending on what you're comfortable, but these typically do an excellent job at figuring out what's going on with trend. And right now, again, definitely bearish. Flipping gears to on-chain stuff, if we look at transaction counts for BTC, I like to look at these on a weekly basis, bouncing a little bit from last week, so not distinctively bearish on their own, but we're still, this is since 2016, we're still not breaking above 2021 highs or 2020 highs or 2019 highs. In general, I don't really like transaction on-chain activity for BTC as far as a metric to use. I much prefer active addresses, which were at all-time highs when prices were at all-time highs. Currently, active addresses continuing to decline since the November 2021 high in active addresses, as well as a price high at that time. But I can't look at this and think, man, we are so bullish. This looks like a bottom. I can't look at this and look at dormancy and think coin dormancy, which I'll talk about in a second, and think, wow, this is so bullish, right? This is the great time to buy. Not investment advice, not financial advice, but I'm just saying, to me, this does not look bullish for price. Something else that no one's really talked about is hash rate and difficulty, which continue to hit all-time highs, continue to rise and rise and rise. We have a congressional hearing in the United States in a couple days on the 20th. It'll be interesting to see if price reacts to that, if hash rate reacts to that, if anything reacts to that. I doubt much will react to that, but hash rate rising indicates miners continually adding ASICs globally around the world in the United States. I'll break that down in a different video at another time. It certainly deserves it, but you don't typically see hash rate on BTC rising this significantly, this quickly, especially since China exodus a few months ago. Something else we can look at, the Puel multiple. This is on-chain coin issuance in notional terms in USD today versus the past 365 days. Again, if we look at this on backtesting, we can say, okay, how rich were the miners here? How rich were they here and here? How rich are they at the highs, at the lows? Are they stressed out? Are they sitting pretty, right? Currently, this doesn't really tell you much. It's sort of in the middle of the range. For me, as a buy zone criteria, I would much rather see it way down here, right? So I'm just comparing this to other stuff that may or may not look bullish. This certainly doesn't look like anything. This looks like neutrality to me. MVRV is getting there. MVRV is another on-chain metric for market cap versus on-chain activity. I prefer this to NVT. This has been extremely clean at the lows and the highs. Again, it's not exactly screaming a buy to me. Very much neutral. Has a ways down to go potentially before this gets to a period where on backtesting it has been a decent place to step in. And then just hitting on the coin dormancy thing real quick, briefly for BTC, I'd much rather look at something like hodl waves on aggregate than focus on specific coin ages. So this shows all of the coins that have ever existed and when they have ever moved. And we can break that down kind of like slices in stone. And we can see when coins have never moved in the past 10 years versus when coins have moved in the past 24 hours. And again, we can line this up with price and see, is there a correlation? Well, there is. We see a lot of activity, on-chain activity. We see a lot of unhodling, if you will, in periods that correlate with all-time highs in price. And really, I like to focus on the 3 to 6 month slice because that really has shown historically a great area for highs in price. It hasn't really shown you lows too well. But ultimately, at the highs for Bitcoin, we've seen between 40 and 60% of the chain moving in the past 3 to 6 months. We're definitely far, far away from there. So we're very clearly not at a high here. But I'd much rather watch this than coin dormancy. Flipping gears to ETH really quick. On-chain activity for ETH transactions per day past 7 days on average. Basically just flat. ETH, unlike BTC, on-chain has sort of held its activity levels. Whether it's DeFi or NFTs or whatever it is. On-chain activity has held over 1.2 million, which was the peak in 2018. So even with fees what they are on ETH right now, we're still seeing continuous activity here. So immediately to me, this looks better than BTC. ETH's active addresses declining week over week since November, but still sit at better levels and look better to me than BTC. I'm a BTC maxi through and through, but data is data, okay? And if activity here looks better for whatever reason, it's hard to ignore on-chain activity on a relative basis. And if we look at the price charts, ETH has held its highs arguably slightly better than BTC has. Both are down about the same, 40% or so from the top. But the problematic things for me on ETH right now is that if you're bullish, ETH is coming off of the longest period of bullish activity it's ever had based on the 50 and the 200 EMA. So we're currently in an active bull cross on ETH, and it's over 620 days now. And if you look back at all of these bull trends, none have lasted this long. So it's looking weak. The whole market's looking weak. And EMAs are telling you, yes, trader, this does look weak. This is about to death cross just like BTC did. It's very unlikely that this doesn't death cross. Now, this may crisscross, right? But we're talking about right now on the decision tree is telling me, okay, it's time to pump the brakes here on ETH a little bit. The trend's definitely looking weak. I've got math on my side to support that. Math, which on backtesting really hasn't been wrong, arguably. So that's certainly problematic for ETH. If we look at ETH's 1 year MA and the 5x multiplier, I can't look at the 2 year because there's not enough data for ETH just yet, but ETH is approaching that area where we get to start to have that bearish bottom conversation. This may last a year, right? Backtesting here isn't clear. It's clear that it is and has illustrated the bottom, but what isn't clear is the duration, right? This could be a 1 year bottom. This could be a Pico bottom in a couple weeks, right? Maybe not as clean as BTC collectively here, but it is getting close to that 2800, or less level. The top end, 15K, right? And it did arguably hit those highs in 2021, early 2021, telling you, yeah, we're more overbought than oversold down here. As we get below these levels at 2800, we get into the oversold territory based on the previous year's price activity. And much like for BTC, we can look at ETH's prior year, and it certainly has pushed up into this range more and more and more. It's illustrated the potential for things like ascending triangle chart patterns and or cup and handle chart patterns, both of which have ultimately failed. As again, you're not seeing any volume here at the highs. No one is excited to buy up here. No one was excited to buy up here. This is the index on TradingView for ETH. So this is aggregated volume here, but there just wasn't enough buyers relative to sellers to get us into deep price discovery. So like I said, we do have this death cross pending. with the yearly pivots on here, we do have some support levels. We do have volume support levels between 2000 and 2650. And we can look at the previous year's range for some idea of where those supports should start to kick in, right? Obviously not a guarantee, but there's certainly more support based on volume between 2K and 2600 than between 2800 and 3K. And in order for me to flip bullish on this, it would need to be back above the 200-day moving average. And really, it's probably going to take a crisscross in those EMAs, first bearish, then bullish, in order to push this thing into bullish continuation again. We can look at the cloud. Again, the cloud is telling you we're bullish above, we're bearish below, we're neutral in the middle, inside the cloud. And right now we are definitely below the cloud, and we are not bullish again until we're back above 3750. In a more conservative way, in a more aggressive way, we can look at those alligator fractals indicators again. And no doubt about it, this is not wishy-washy at all. This is not noisy at all. This is definitely bearish, 100% trend-wise, has been. And again, you're looking for, in this case, 3400 is what this aggressive area is painting in order to buck against the bear trend. And ultimately, you do want these MAs to cross, just as they did in July and October, to start to show you some strength here. One other thing remotely that this could be starting to paint as well, I'm trying to find a chart that it looks decent. If you look at this head and shoulders possibility again, right, you continue to see these fractals over and over and over again, so long as they fill in that bucket of what does price look like, right? You don't need to be too specific with it, but yeah, if we start to see 3 local highs, 2 of which match each other on a horizontal support line, that tends to have a bearish bias. So that's all for this one this week. Let me know what you think in the comments below. Let me think if you agree or disagree. What did I miss? What do you hate? What do you love? Like, dislike, comment, share, subscribe, and happy trading.